All right, it is Wednesday, June 12th. Taking a look at NQ here for a post FOMC session recap. Now, coming into the session, essentially what we wanted to see was whether buyers could continue what started yesterday as a near-term range breakout. As you remember, price traded within a near-term range for the better part of 4 sessions. Here's last Thursday, Friday, Monday, and then yesterday. I won't rehash all of this action because we've talked about it at length in the previous session recaps as well as the pre-market prep. If you missed any of those, go back and watch. But essentially, we have that near-term range breakout Tuesday afternoon. Price just kind of oscillates there throughout the overnight session, and then we get into CPI. So what I had mentioned this morning during that pre-market prep live stream was ideal scenario is price gives us some type of retest down into the prior breakout point, something like this. That would be a textbook opportunity right through there. We look for bids right through here in that prior all-time high, that prior near-term range high at the 19,150 area. Now, that did not materialize. The other scenario that I had outlined is that, price just sees that continuation here, and that's exactly what happened. And from there, that was my least favorite scenario of the two, simply because it's going to make it much harder to get involved. We have to wait for some intraday structure. It makes the setup much more challenging if you want to align yourself with an A+ trade. Now, if you're just doing anything in the market, doesn't really matter, but I like to align myself with good trade location. And so this type of action post CPI and then an opening drive setup makes it tricky. There's some spots here and there where you can get involved with maybe a B quality, a B+, maybe an A- trade opportunity. But personally, I wanted that A+ opportunity, and it just did not materialize until post FOMC. So point is, and I'd posted this in the chat as well, is just because you see the market making a sizable move, if there is not an entry within your framework, within your playbook that is presented, then you really should not be worried about it. You really should not be feeling any type of FOMO, because that was not your setup, right? That was not your trade. So you just let the market go. You just let it trade until your setup, until your play actually materializes and actually develops. And if you find yourself with that mentality that I'm talking about right now, like actually waiting for your setup, not feeling FOMO during this big push, that's a very, very good sign. That is one of the signs of a more mature and professional approach to your trading. Gets you out of that gambling mentality of trying to catch every single wiggle that the market offers. So we have the opening drive trade. Now this is key, because one of the things I had mentioned prior to the open again was gap rules are going to apply. Remember, anytime price is gapping higher, especially on the index, what we really want to be watching is how the open is treated. In this case, price is gapping into all-time highs. How is the open going to be treated? Are buyers able to defend the gap or not? That's what we're looking at. Can buyers defend that gap? And a good rule of thumb, the way I like to do it, is let that first 5-minute bar close. That's going to give you a really, really good clue about whether or not the gap fill trade is going to be on or the gap is going to hold. The second this thing closes green, that is pretty much my clue to, well, I'm not going to be shorting anyway, but that would be my clue to avoid any type of shorts, right? At least until 10 a.m. reversal time, and then take it from there. So if you find yourself right off of the gate, trying to short because CPI has that big gap higher, you need some type of rule like this, the one that I use, to keep yourself kind of on the right side of things, right? And the same goes for selling. If we saw selling right off the open, well, you probably want to be careful with any long trades until at least 10 a.m., until at least that gap is filled. So that is one that has served me incredibly well over the years. If you don't have anything like that, definitely highly recommend adopting some type of approach like that. But we get into 10 a.m. reversal time. There's not really any reversal whatsoever, right? Almost no pullback is offered to get involved with this trend higher. Price just sets up a small consolidation at our upside reference point of 19,500, and fresh all-time highs, fresh session highs are made. Now from there, it's just late morning, early afternoon range, right? Even into FOMC. This is definitely one of the quieter FOMCs I've seen perhaps all year. I really cannot think of a more muted FOMC reaction in the last, definitely for this year, but maybe even in the last couple of years. Generally speaking, we're going to have price at the very least leaving that intraday range, right? And you get the move above right here, but essentially that's just an up thrust. You just get the little blip above session highs and it quickly rejects. No session low or anything like that. Price just oscillates right through here, which is where you'll find the session volume point of control at 19,500. So with that in mind, I mean, you do have some isolated opportunities versus VWAP, right? We could see how well VWAP was holding, and I believe that aligned decently with that intraday fib retracement. If we take the retracement tool, yeah, you have the 50% fib retracement tool. So again, that's not going to be an A+ setup because there's no level of interest there, but you have a couple of reference points that you can actually lean on and kind of build some confluence for a trade idea. It also happens to be the post CPI high, right? These levels are usually going to be watched for the session. They'll usually be significant for the session. So take a look at that. VWAP, post CPI high, 50% fib retracement. You start to build the case for a pretty strong trade opportunity. Again, not A+, but we can still get an A- or A quality trade out of some setups like this. So some decent opportunities there. Definitely, things that are a little unordinary from what we usually see as far as FOMC reactions are concerned. Definitely have a lot more volatility on these days than what we saw today. Part of that was likely due to the CPI move, right? It's already been an extremely volatile day. As far as what we'll be looking at for tomorrow, I'm going to be keeping it pretty simple and just wanting to see how price trades versus today's range, right? So I'll be looking at today's low as well as today's high as the two primary reference points for tomorrow's session. Now let's get a look just to better understand the shape of the daily, because this doesn't really do it any justice, just to make sure. And we could flip over to QQQ. I like to do this just to get some eyes on the shape of the regular trading hour session. Remember, because if you're just looking at NQ, what you're going to find is the daily chart shows the extended trading hour session, right? So quick workaround there is just check QQQ. You can see the gap higher, right? You can see the shape of the daily bar, again, just regular trading hours. And the same goes for SPY versus ES. Speaking of which, ES today, as it has been, definitely showing, compared to NQ, relative weakness, right? We still have price here at all-time highs. Don't get me wrong. It's still buyers in control, definitely. But compared to NQ, ES has definitely been much weaker. You see ES actually making a session low here. Post-FOMC, a little bit of a spring opportunity right through there, post-FOMC. But broadly speaking, this thing has been much weaker than NQ. That's why I continue to focus on NQ right now, especially as my focus is on long setups. NQ has just been the better instrument to be focusing on. Now, for ES, the structure is pretty similar, right? If we zoom out a bit, you see the structure here. We had a near-term range. Here's your prior all-time high back here, and price triggering that breakout, not yesterday, but actually this morning. And so the approach today, the approach tomorrow for ES is going to be the exact same thing as what we discussed with NQ. You want to see how price trades versus today's range, right? Right through here, essentially, right 54.16.5 by 54.54.5. I mean, look how muted this FOMC move is, That is highly unusual. Now, just like we did on NQ and QQQ, take a look at the SPY daily candle, right? Now, as always with these types of candles, this definitely does show exhaustion, but for confirmation, price would have to be breaking the low of this candle and holding below, right? Keep in mind that the trend is the main thing to focus on here. We don't want to get overly fixated on the shape of an individual candle, especially if it starts to introduce some bias in what it is that you're doing, unless this candle actually shows some confirmation. And again, for that, we need a break of today's low that shows acceptance, meaning price holds below today's low. So that's the recap for NQ and ES, as well as a kind of little look ahead for tomorrow. Primary focus is just going to be how price trades versus today's range. Take it from there. Fresh all-time highs today. Pretty muted FOMC session. Hope you guys had a good sesh. Didn't find yourself in too much trouble. I had mentioned this morning in the pre-market prep, FOMC is definitely, more dangerous time to be trading. The risk is much wider than what we usually see on a typical day. And so if you manage to stay out of trouble, not do any damage to the account, or even had a green day, that is phenomenal. If you have any questions, feel free to shoot me a DM. Otherwise, I'll see you tomorrow morning for the pre-market prep live stream. Have a good evening.